Welcome back, everyone. So today we're going to be looking at Crocs stock. Their earnings were just released today, and overall was sort of a mixed bag reaction. So for starters, they did post record numbers, but we do need to get into two things that were perceived as bad. The first thing is that they are not guiding for the numbers that analysts thought they would in Q1 2022. However, the other thing that was mentioned is the share dilution. So Crocs officiated that they are going to be acquiring Hey Dude brand, which is another shoe brand, and it's going to be at the expense of a set number of cash they'll be spending and some stock compensation. The shares outstanding is going to increase by about 2.8 million, and that's somewhere in the ballpark of about a 4.5% increase in shares outstanding. Now, just in case anyone who's watching doesn't understand why share dilution or adding more shares outstanding is bad, imagine you have a whole entire pie. In this pie is the stock owners of the company, and we're all splitting this pie amongst each other. So if there's share dilution and more shares outstanding are added, now there's more people that have to share that entire pie. That's why they call it share dilution, because I just got diluted and now I own less than I did before because of that share dilution. I'm sharing it with more people. However, I will argue that share dilution really isn't bad as long as it's used correctly. The alternative would be taking out debt to pay for this new brand that they're acquiring. So as long as they can prove the case that this is just going to help business grow, the share dilution really isn't that big of a deal. So between the record numbers they posted for 2021 overall, but then also what some perceived is the bad news about share dilution and them not meeting analysts' expectations for guidance Q1 2022, we overall had a mixed bag, and the stock isn't down too much today. It's overall like down 5% on the day, which is a lot better than a lot of stocks have held up after their earnings. So I think what a lot of people missed from the earnings, though, is Crocs company basically saying, look, we are confident in our ability to reach $6 billion in revenue by the year 2026. And with their confidence of $6 billion in revenue by that point, I had to run a DCF model based on their revenue figure to see what the stock price would be. Okay, so we go to the DCF model, and based on what they say, they confidently say is $6 billion in revenue by 2026. In order to get to that figure, we had to do roughly 21% revenue growth rate over the next 5 years. I also had to factor in the new shares outstanding count, which was brought up to about 61.7 million. And when we factor everything out, we get a fair value of 182.68, or $182 a share. That is also with our required rate of return of 12% factored in. So the management for Crocs company says that they feel very confident that $6 billion in revenue by 2026 is a doable figure. So based on that figure, which works out to 21% revenue growth over the next 5 years, we get a fair value of about $182. So Crocs company basically thinks that this is worth about $182 a share today, which is almost a 2x from where they are now. Now, I just wanted to prove my point about where Crocs company and their management thinks that they're at. However, when I run a DCF, I like to be more conservative. That's what you should always do with these models. So I also ran another DCF model based on 10% revenue growth rate over the next 5 years. I personally feel that 10% is being very conservative, so let's see what that looks like on the model. So we jump right in, and based on a 10% revenue growth rate through the year 2026, with our same rate of return of 12%, we get to an intrinsic value of 117.63, or about $117 in fair value. So I feel that I was being fairly conservative with this growth rate, and still, the fair value came out to about $117 a share. Based on these assumptions, the model definitely says that this is currently a buy. Alright everyone, so that's gonna wrap up the video. Let me know what you think about Crocs stock down below. How do you feel about earnings? Do you think they held up relatively well? And what are your overall thoughts on where the share price should be? Also, if you like this kind of content and feel it adds value to your day, go ahead and give the video a thumbs up, sub to the channel, and with that, y'all have a great day.